please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi guys, we wake up to bad news from across the globe. So today is going to be a tough day. Of course, the market has been in a bear grip. So that seems like it could continue at least at the start of trade today. But what are the stocks to look at this morning? Our entire team is here to tell you about that list. Let's welcome them. Anuj, what are you looking at today?
Also before that, even the US futures are down even after that big fall. There's one more firing from Donald Trump. So that's become a new norm. But my point is that in terms of stocks today, I would want to see what IT stocks are doing, because yesterday there was quite a bit of weakness, and this is where people have money, right? This is where you have made money. So do you want to take that money home? I would just want to see that. For example, stocks like Mindtree, NIIT Tech, the mid-cap IT pocket, which has done extremely well. I would want to see that. Mindtree is up about 4% this month, but yesterday fell about 2%. See that chart of NIIT Tech over the last 1 month. Let's just get NIIT Tech now. That one was also up quite a bit. In fact, one of the top gainers this month, up 13% this month. Yesterday there was some slip in that stock as well. Almost ended at low point. So that I think could be the space to watch out for today.
Okay. And then there will be a bunch of other stocks. So we are keeping it brief because it's going to be an overall market reaction. But nevertheless, specific stocks, Mangala?
Lata, I'll start with the IT pack that Anuj also alluded to. Also, because there was some news that came by Accenture's numbers, the revenue growth was good, beat guidance. In fact, not only did it beat guidance, it also the company went ahead and also upped their revenue guidance to 7 to 9% from 6 to 8%. So that is a positive. However, given the scenario of the market, we'll have to watch out for this space very closely. Talking about IT, there was also Idea Cellular. Let's shift focus to the telecom space. They announced new leadership. Interesting changes there. The CEO will be Balesh Sharma from Vodafone's end, and the CFO from the Birla's end will be Akshay Mundra. The existing CEOs have not been given leadership positions in the current scheme of things. Indraprastha the gas, they've announced reduction in CNG prices in Uttar Pradesh, reduced the prices by about 3.15 rupees a kg. And finally, because it's Friday, we talk about United Spirits. They've announced a stock split, so the big bottle will be served in small pegs on April 13th.
Okay, thanks a lot for that, Mangalam. Well, there are plenty of other stocks to look at. Of course, today you must keep an eye out, as we've been saying, on the IT space as well. That was the one that gave up yesterday, and banks too have been under pressure. But Nigel is here with us to tell us about the other stocks that are in the news this morning. Nigel, over to you.
Well, we're looking at JSW Energy. They've secured a PPA for around 200 megawatts, so keep an eye out on that stock. L&T Tech, in fact, they've signed a multi-million-dollar order coming in from a German company, so that one as well should be in focus. Mahindra & Mahindra, in fact, they have signed an MOU with Ford to develop mid-size as well as compact SUVs and electric vehicles. So you should focus on that stock as well. And well, it's going to be all about technicals today. So watch out for stocks that are very, very close to the 200 DMA. They're between, 1% to around 2% away on the higher or the lower side. So a few of those stocks, they are on the screen as well. And finally, new kid on the block, Bharat Dynamics, that list today. So let's see, what a day to list, but we'll watch out for that stock as well. Back to you.
Okay, I think there is a combo in these guys. One of them in Western attire, one of them in Indian attire. One of them spoke about the global repercussions on Indian stocks, and the other spoke on domestic stocks.
Okay, interesting spotting, Lata. Let's now invite our technical guests, Ashwini Gujral, Mitesh Thakkar and Prakash Kaba now join us. Good morning, gentlemen. Ashwini. What a morning it looks like. We are in for at least a 100-point gap down as per the SGX Nifty, and global markets also down quite a bit. You're smiling because you've been talking about this possibility. But point here is there a trade after a gap down?
Good morning, Anuj. I told you to go on a pilgrimage, but you never listened to me.
Why didn't you?
Well, the market doesn't listen to me as much. So, as far as the US market is concerned, while till now it was, quote unquote consolidating, but yesterday's downside is probably leading to some sort of a, intermediate top even in the US, and maybe 100 points lower, 2550 if it breaks on the S&P. You are potentially looking at a 2200-2300 type of zone. And given the events, rate hikes, trouble with Facebook, which was the leader of the rally, and plus now trade wars, that shouldn't be out of question, because this sort of, strong action, when it happens, it generally has potential for more. And we've been talking about this head and shoulder. The target of that is about 92 to 9400. Today's gap down will now become a stiff resistance. And while, you know, at the open, if it opens 150 points lower, there is no trade. But if we open like 100, 110, then maybe on rallies you can sell into it. But today the money will be made by people who went short yesterday at closing. But it's clear that the market should now have a sort of a meltdown type of phase, because it's unlikely people will step in to buy in the face of this sort of both global and domestic pressure. Plus we have new frauds which are coming out. So banks, any case, are heading lower. Maybe 22,500, 23,000 could be that next target.
Okay, Ashwini, good morning. Just a question on whether this could be a trending lower day, even if it opened 100, 110 lower. You know, when the US markets closed, the Chinese retaliation wasn't in yet. And of course, the European markets too had not reacted to Trump's announcements entirely, nor to the retaliation. So chances are at midday today at 1 o'clock, we are going to see a European fall, and then we are heading to a weekend. So is there a danger of a trending lower day, even with just a 100 point or 150 point gap down opening?
See, let's say that even if Trump was not even born, this would have happened, because the markets were going down anyway. This just accelerates it. Okay. So my sense is that maybe there are some positive statements in the afternoon and the market recovers 50% of its losses. Okay. That does not negate the negativity. But overall, in all markets, there is perceptible fear, plus everybody is sitting on large gains. So buyers will be slow to come in, and shorts will have a field day. So chances are we should be headed lower, because we anyway don't rally when global markets are going up. Now they are going down. Maybe we'll probably do a bit more.
Okay, Mitesh Thakkar and Prakash Gaba are also with us. So let's get some views in going from them. Gentlemen, morning to both of you. Mitesh, I want to come to you. Do you get a sense that a meltdown is possible from here, and we're looking at levels much below the 10,000 mark? And would you also short at opening?
Yeah. So two things. One, I think, the last swing low was around 10,050, and we are most likely to open below that. So in that sense, I think, yes, given the fact that we might sustain below 10,050, I would be open to short. Looking at targets close to about 9,900, and once it breaks, I think, even 9730, 9700 is a decent possibility. A lot of stocks will also break support levels where they've been trying to build the base as the market was kind of sideways and choppy in the last few days. So those support levels on the intraday charts will be broken. So that should add to pressure. Also is the fact that the Bank Nifty finally will break the key support levels of 24,000 most likely in the opening. So I think, very clearly, if you open around 10,000, 20, 30, best levels to short with a 40-point kind of a stop. I don't think 10,050 should be recaptured again. If that happens, then you are out of the position. But otherwise, chances are more of a decline falling, of a follow-through happening on the lower side.
Good morning, Prakash. Your Nifty trade today, if any?
Good morning, Lata. I think last week we spoke about either Thursday or Friday that classical textbook pattern of head and shoulder. I said we could see a rally, and a rally could be short into. The rally has not come in. That itself is a sign of weakness. What was expected did not come, shows that there is more weakness in the system. Is yes. The target is sub 10,000. The nearest target that we have is 9,754. I think we are heading there. It's a matter of time. And maybe lower, who knows? We must say the market seems to have topped up in the upper regions. And on Bank Nifty, we should very easily sail past 23,875. That's the nearest target that we have for a day or two.
Okay.
Ashwini, before we discuss stocks, for retail investors, since we have already corrected from 11,000 now to about 10,000, is this the zone in which you should be accumulating good stocks?
See, I've been hearing this word anchoring bias for the last 3 or 4 days. What you need to see is, the rally from the lows, which is about 8,000 to 11,000. Anytime a market corrects 50% of the previous rally, it's still a bull market. Now that a target is there, the markets all over are collapsing. I don't think there should be a tearing hurry to get invested 100%. Yes, quality stocks, you can keep buying, keep nibbling with the clear idea that there could be another 500 points on the Nifty, and that's where the real buying must happen. this market will need to create some sort of a base. The way it's gapping down, the way it's collapsing, I don't think it will just one day, get up and start moving higher.
Okay, what about stocks, Ashwini? What would you be looking at doing with individual stocks today, especially with, the IT index that has been coming off quite a bit over the last few days?
Well, IT index maybe could even outperform the banks on the downside today, because that's where, things haven't happened. And, I would see things at Facebook as a fraud. Why? This is similar to WorldCom and Enron. When the leaders of a market start to face this sort of trouble, I think the IT index, even in the US, is in trouble. So that way, I think the IT index also should come off if markets get to 9,500 odd. I think IT index will collapse also substantially. Having said that, individual stocks, Adani Enterprises a sell with a stop of 164, target of 152. PFC is a sell with a stop of 90, target of 82. Jet Airways is a sell with a stop of 646, target of 620. Reliance Capital is a sell with a stop of 416, target of 398. Hexaware, I had included a buy as a buy with a stop of 380, target of 395. But maybe you want to withdraw it given the way US markets have fallen.
Okay. Well, I hope there is a thin line. There is a line of difference. WorldCom and Enron went into Ponzi terrain. Facebook looks more like a production error that had not been plugged. But yeah, we'll have to wait and see. Mitesh, what are the stocks you would trade?
Yeah. So I have 5 sell calls, and I don't know how many of them will be tradable given the fact that we might open with a slightly bigger gap than what the early morning SGX fall indicated. Arvind could possibly decline to 363 and stop loss here should be 391. BEL was a sell call yesterday as well. It's going to keep pivot at 146, so sell with a stop at 147, look for 134 as the target. A Federal Bank could be a tradable stock given the fact that I have a conditional sell to go short here once it breaks 89.5. So then short with a stop at 91.5 for targets of 84. SRA Infra again a sell call yesterday. There's some continuation pattern on the downside. Sell with a stop at 78.5 for targets of 71. And Reliance Capital will most likely break a key support of 410 today. So sell with a stop at 416 for targets of 390.
Okay, Prakash, what about you? What would you buy or sell today? Any buys at all?
Sonia, I have a buy, but I think you'd ignore it. Okay. But for the sake of it, yes, National Aluminium can climb to 74. Will it? I think I'll ignore it. Stop below 66. 3 shorting calls. Canfin Homes looks weak. Is more of an exhaustion pattern here. We can see a slide to around 500 zones or even lower. Stop above 525. Divi's Home is again a stock, which again is more of an exhaustion pattern here. Can see a slide to 1040 or 1025 zones. Stop above 1100. And Jet Airways, I think is landing hard out here. It's broken down. Seeing a slide to around 617 zones or maybe 600 zones. Stop above 666.
The global markets are in a bit of a mayhem phase this morning, and big markets are down 2 to 3%. SGX Nifty also down about 1.2%. Shane Oliver of AMP Capital Investors and Chetan Iyer of Morgan Stanley now join us on the phone line. Good morning, gentlemen. Chetan, let me start with you. Your thoughts on the latest rhetoric from Donald Trump. First of all, is it a rhetoric, or do you think this will have significant and severe impact on the global economy?
Well, we think that these measures are actually less aggressive than what we feared, and I think markets feared at that point of time a few days back. Look, there are 2 sets of measures that have been announced. The first one is the imposition of tariff against value of goods imports from China of about $50 billion. And the second one, which is not noticed as much by the media, is that they've actually taken back tariff for EU, Australia, Brazil, and Korea. So with these measures, we now have roughly just about $15 billion worth of steel and aluminum, which is now under tariff. So there has been a reversal of some of the measures which were taken earlier, so that's positive. Clearly, the levying of tariff on Chinese goods imports is negative, but it looks like to us, while they announced this statement, the U.S. administration official did also mention that we're in the middle of a big negotiation with China. So it's unclear to us at this point of time whether this is a move by the U.S. to then eventually negotiate with China as well, just as they have actually reversed some of the tariff on steel and aluminum, or it's actually going to go further deteriorate from here. At this point of time, we think it is more likely to have a moderate impact on trade and growth. And we still maintain our view that global trade and growth will be relatively strong going forward.
Okay. Let me check if Shane has a similar view. Shane, good morning. What's your sense? The market seems to be factoring in more than just a minor fall in growth. I mean, after all, we've seen the yields fall all the way to 2.8. Is there a real crunch in growth? And will the markets react much more now in sheer anticipation that it'll spiral out?
Well, I would tend to think the markets have overreacted a little bit because I would agree that the announcement overnight was actually less severe than had been feared from President Trump. It does appear to me that it's a negotiating tactic ahead of negotiations with China, all aimed at extracting a better deal from China in terms of the treatment of US intellectual property. As we just heard then, I totally agree that exactly the same tactic was employed in relation to the steel and aluminium tariff, which was announced 3 weeks or so ago. Initially, it applied to everyone, and then suddenly we get exemptions coming through for big exporters of steel to the US are getting exemptions. So it's as a classic case of the art of the deal, where the aim is to go in tough, appear almost crazy and irresponsible, and then come out with something which is far less onerous and far more acceptable to both parties. And I think we'll see the same here in relation to China. It's not in Donald Trump's interest to end up with a trade war, because a trade war would mean higher consumer prices in the US, higher prices at Walmart, and a big impact on US exporters like Jack Daniels and Harley-Davidson motorcycles, all of which would work against his base, his supporters in the upcoming midterm elections. So I think he wants to extract a deal. He doesn't want to cause damage to US exports.
Chetan, for Indian viewers, do you think that they should not panic at all? Because on one hand, as you said, there would be a moderate impact on global growth, and on the other hand, India has been fairly resilient to this news flow.
Well, I think for India, there was another announcement where they said that they filed a complaint against WTO for subsidies on some of the products that India provides. So as of now, it seems like the approach that the U.S. has taken against India specifically are not something which would sound to be unilateral, aggressive move. So I think that so far it looks like the impact of this for India directly is relatively more moderate or measured. And so we are not really concerned about its direct impact on India as of now.
Okay. Shane, would you be buying India now? The market anyway underperformed other markets. At what point would you buy India, for instance? Nifty under 10,000?
Well, possibly. I think India, for many years, was very relatively overvalued compared to other global markets, and that relative overvaluation has now been reduced. So, yes, I would be looking to buy India. The only thing that gives me a little pause for caution in the short term is that these risks around a trade war are still there, and this issue may linger for a little while yet. So I don't know that I'd be running in just yet. And the issue with the trade war, of course, is that it does hit emerging countries somewhat more than developed countries. Maybe India a little bit less because it's less trade exposed, but still there is an issue there. There's also an issue through time that as the Federal Reserve in the US continues to raise interest rates, that at some point it might put upwards pressure on the value of the US dollar, which would work against emerging market currencies, including the Indian currency. So, big picture sense, yes, I would be looking to buy India, but maybe not just yet.
Okay, looking to buy India, but not just yet. Chetan, has there been a precedent to this trade war? I mean, how have these issues shaped up in the past? Have protectionist policies and then retaliatory measures contributed to higher global inflation, as well as any impact on emerging market equities, etc.?
Well, I would not speak about the markets, but in terms of the economic implications of this, I think the most instructive experience that global economy has had on this front is the early 80s, when U.S. had taken similar measures against Japan. And interestingly, what we now dig through the data and see is that Japan's market share in U.S. imports during early 80s, despite all the protectionism measures that the U.S. had taken, was really nothing. Its trade share maintained stable. And as the U.S. economy recovered after that period with loose fiscal and monetary policy, actually Japan's market share in U.S. imports rose. So honestly, yeah, I mean, the previous experiences have been sort of telling us that the impact of that in terms of global trade and growth was not really that severe.
Actually, more severe have been the comparisons with 1929, when things actually spiraled out of control. Shane, are you catching this falling knife? And if yes, in which markets?
Not at the moment, we're not. Earlier this year, we took a bit of money away from equity markets because we felt that investor sentiment had become too high. There was too much optimism around. Everyone was talking about a market melt-up or blow-off. So we took some money off the table. Then when we saw the falls into early February, we put some money back into markets. And, of course, since then, we've seen a bounce. And now some markets are coming back down to test those lows in early February. So at the moment, we're not seeking to catch a falling knife, but I would say that the sentiment extreme optimism we saw earlier this year has now been removed, which I think is a good sign ultimately, that providing ultimately we're right and we don't see a global trade war, the global economy continues to grow at a reasonable rate, then at some point you would be using this as a buying opportunity. But maybe not necessarily today. Although I am conscious that if you look at the pattern over the last few weeks, you've got midweek sort of sell-off, sometimes on Thursdays, and then Friday turns out to be the rally days. So there's always that chance that the US market could rebound from here, particularly given that news regarding exempting various countries from steel tariffs. I mean, that just is a sign that what Trump is doing is trying to negotiate.
Okay, Shane and Chetan, we've run out of time. Thank you so much for stopping by and speaking with us. So that seems to be the consensus view from all the experts we've spoken to so far. Fears of a full-blown trade war are a bit exaggerated and markets perhaps have overreacted. But let's see, we have lots more experts lined up post the break.
We're just counting the minutes. In 10, we will get the pre-opening rates. And let's therefore put some F&O cues as well, F&O trading strategies on the table. Okay, SGX Nifty now sagging a little more, 9997. Chandan Taparia of Motilal Oswal has joined us. Good morning, Chandan. F&O strategies?
Yeah, very good morning. First, talking about the market, just 2-3 days back, it made bottom near to 10,050, and the major support for the market is 10,033. That is the swing low made at the time of Gujarat election result in December 2017. So if that is not respected, then market may start the fresh leg of decline. So need to be cautious if that happens and market sits below like psychological 10,000 kind of zone. Talking about the stocks, more shorts than the longs going forward. Looking at the TVS Motor, there is the first sale idea from our side. Our last interaction also we have recommended the same. We are expecting more weakness into the counter. It started to form lower top, lower bottom formation, slip below 200 exponential moving average. It has also formed a narrow range breakdown and forming a head and shoulder pattern which has the negative implications. So looking more weakness into the counter, one can sell with a stop loss of 625 and it has potential to go down to a 570, 565 level. Second trade, that is also on the negative side, but I am suggesting to trade with the put. That is the Ambuja Cement. We have seen selling pressure in SEC, Ambuja Cement, Ultratech, Grasim. All these stocks are likely to be under pressure. Ambuja Cement looks like to go towards 220 kind of zone. So one can buy 230 put, keep the stop loss of 2 rupees and expecting the target towards 8 rupees. One long, that is the NTPC. Comparative low beta counter. Recently it has formed a positive price pattern and even after the market decline, the stock is up by around 6% in this entire series. Trading above its volume weightage average. So some buying interest is visible in the power counter and expecting our NTPC to outperform. So one can buy with stop loss of 166 and the stock has potential to move towards 178, 179 levels.
Okay. Well, thanks Chandan for joining us and giving us all those ideas. Ajay Bodke also joins in now. He's the CEO and Chief Portfolio Manager PMS at Prabhudas Leeladhar. Ajay, hi. Good morning. The problem pocket really has been with the banks and the kind of sell-off that we've seen there. For some of these, better quality banks, say an SBI, would you look buy it after the 20% correction that is seen this year, or would you stay away from the PSU banks entirely?
Well, I think I'd advocate investors in the current turbulent, both global and domestic scenario to stick towards strong retail-focused banking franchises. Although SBI among the PSUs does look to be better placed. And if you look at the SOTP value, the businesses, both mutual fund businesses, life insurance businesses also are growing very strongly. So I think some allocation could possibly go towards SBI in the PSU basket. But I think I would still veer away from the PSUs as as a basket, and also corporate-focused private banks, and stick to HDFC Bank, Kotak Bank, and IndusInd Bank.
Okay. Good morning, Ajay. Thank you for joining us this early. But would you buy at all now, or would you just want the market to tell you it's fallen enough?
Yeah, I think, Lata, good morning. The market today is trading at around, say, 17.4 times FY19 earnings. We are expecting around a 19% growth in FY19 earnings on the back of 12% growth in FY18 earnings. Now, if I look at last 10 years average, it is around 17 times. So strictly from that perspective, the market still has around 2 to 2.5% of downside on the fundamental basis. So 9,750 is the level at which I think a large amount of buying could come in. Also, if I look at the MSCI India premium versus MSCI emerging markets ex Japan, we last 10 years average is 39%, and we today already are trading at around, say, 32%, so below the last 10-year average. So from both these fundamental perspective, a matrix perspective, I think the downside does appear to be limited. But I do take your point. Instead of allocating the entire capital right away, I would much space it out and do it in 2 or 3 tranches.
Okay. How would you approach some of these large cap IT names now? I mean, they were doing really well so far, but this week has been a bit disappointing for them. So names like Infosys, etc. have come off a bit. Is it still a good time to buy either large cap or mid cap IT?
Yeah, I think I'll be very wary of jumping in mid-cap IT companies. I think investors have got taken in by significantly higher growth rates that they have posted over the last couple of quarters. However, they seem to have been completely blindsided by the risks, concentration risks in terms of the top clients or 1 or 2 verticals that these companies are focusing on. So I think there is a trade in case of large cap IT names where the valuation differential has widened significantly, and they have far better risk mitigation strategies insofar as client concentration is concerned, insofar as different horizontal and verticals are concerned. So I think I would look at the large cap ITs more favorably at the current juncture than chasing small cap ITs, because the risks have gone up significantly in small cap ITs.
Okay, the risk has gone up significantly in small cap IT. By the way, in pre-opening, we are just waiting for the pre-opening rates to come in. About 4 more minutes left. Anuj, even if we do see any kind of a big sell-off at opening, which is of course expected because of the way the global markets have moved, do you get a sense that maybe there could be a floor around this 10,000 mark, or is it just a matter of time before that gets taken out?
No, it's a bit of a hope for the bulls. Markets normally bottom out in correction when the last remaining bull turns a bear, and you see, clear pain in the system, Sonia. My sense is that would happen somewhere around the 9,700 mark, not at 10,000. But today, I don't know. I mean, after a gap down, how do you approach this market? Perhaps you wait for an intraday recovery. This kind of fall that you're seeing in global markets, this is not normal. This is just something else. 700 points on the Dow, and on top of that, futures are down. So, and Hang Seng down about 850. So 2.5%. Let's see. Let's wait for the first hour. I think first hour will give you some cue in terms of where things are heading. Okay, let's do one thing. Let's take a short break. We have lots more coming up on the other side of the show, so do stay tuned in. SP Tulsian of sptulsian.com will join in to tell us how to wade through all of this news flow and give